So now let's have a look at how the external audit and the audit committee, how do they work together? Well, general principles is the audit committee will recommend the external auditor, so recommend their appointment. They don't appoint them, they're appointed by the shareholders, but the audit committee will approve the external auditor's fees and terms. Okay. The audit committee will assess the external auditor's independence to do the job. Remember, they're working on behalf of the shareholder. They will look at their objectivity. They will look at how good they are, the effectiveness of the external auditor. Okay. Now, there's an annual audit cycle, isn't there? And the audit committee is involved at all stages. That's the whole idea. So it's not like they're just involved at the start, at the beginning of the audit. They're involved all the time, meaning they're involved in the planning of the audit. You might just think that's the external auditor. It's not. They're involved in the audit planning. Okay, so they will make sure that they will be looking at things like are the management prepared for everything? Are all the resources of the external auditor, can they do the job? Does the external auditor have the skills and experience to do the audit as well? And they're going to therefore meet with the external auditor to discuss all of these matters to make sure that they can get it done properly. Okay, so planning and the strategy. During the audit, they're still going to be involved. They're going to be involved in any issues that the external auditor brings up, any big judgmental decisions, both by the management and by the external auditor. They will be looking at what error levels we are using, the performance materiality stuff. We will be, or they will be, asking management why they haven't adjusted things that the auditor has told them to. Okay, they will be monitoring the management responsiveness to the audit. Okay, so basically they're making sure that everything works as it should, that it works smoothly, but it's also efficient and effective. Then at the end of the audit, so they're involved at the planning, they're involved during, they're involved at the end. And at the end, they'll have a look and they'll say, did the external auditors do what they should have done? Did they meet the plan? Okay. Why did they change the plan? Yeah, I mean, we're not saying it's a bad thing to change a plan. It's a good thing as things come up, but let's make sure we know why. Have the audit risks changed from what they were planned at? Okay. How well did the external auditor use judgment? How well did they use that judgment? Okay. Ask key people. How well the external auditor did. How well did they perform their duties? And the key people would be people like the finance directors and the internal audit head, that sort of people. Okay. Review the management letter. Remember, the management letter is the set of recommendations that the auditor gives. Okay. Review that and say, does it show that the external auditor has a good understanding of the business? Or is it just a generic thing? Okay. And then finally, they will also report to the board on the external audit effectiveness. Okay, how good were they at the job, the processes they used. Moving back up then to non-audit services. Okay, non-audit services. So you're giving audit and you're giving something else, all right? And the whole point of this is the audit committee should have a policy on this to begin with. Should they just do the audit, etc.? And within that policy would look at, right, does it affect the external auditor's independence? Does the external auditor have the skills and experience to do this extra work that we're asking them to? Are there sufficient safeguards to maintain their objectivity? What is the type of service that we're asking them to do? What effect will it have on the fees? Okay, all those sorts of things. And you can have formal pre-approved things. Okay, so or not, it is pre-approved, but kind of formal policies based upon whether it's pre-approved. So you could have certain things that are just like, yeah, as long as it's under 5,000, you can do what you like. Or it could be that it needs approval, or it could be some that external auditors are never allowed to do. So have formal set levels, that sort of thing. Okay. Just now, where shall I put it? I'll put it over here. There is an audit committee section in the annual report. Okay. So let's have a quick think about this. What would you put? What the audit committee put in their section of the annual report? Well, they will put in their assessment of the external auditor, okay, of the external audit process at least. They will put how long the external audit took, the time, and the time they have been with us, literally meaning 1 year, 2 years, 3 years, 4 years. When was it last put out to tender? When did we last ask other people, other auditors, to come and tell us, what could you do for us? Okay. They'd also put in whether there's been, if there's any contractual terms, so if there's any contractual terms restricting the audit committee's choice of external auditor. Okay. And what they will also do, they will also get information about the external auditor's processes for maintaining independence. Okay. That's pretty much it. All right. So quite a lot, quite in depth, but make sure you learn it well.